This is a weekly chart, as you can see up here in the upper left-hand corner. We have relative equal lows down here, so we may have turned the corner and going into the latter portions of this year. It wouldn't be surprising to see it come down here with all the election antics that may be coming our way. But the bearish order block here, I've noted that. We have a swing high, and now we have had the market break below the previous weekly candlestick low. This inefficiency in here, it can drop down into that. And then we have this wick, which we'll address that when we get closer to it, should we do that. But right now I have this wick graded. So it's the high, which is the close of that candlestick. The upper quadrant, consequent encroachment, because we treat wicks like gaps. Lower quadrant, and the low of that wick. Dropping down to a daily chart, those gradients on that weekly candlesticks discount wick, we broke through that and we're trading down into the daily fair value gap here. This is a buy side imbalance, sell side inefficiency. So we hit the top of that today, and we'll be looking to see if we can make further traction lower. I'd like to see it get below this and come back up and act as resistance. And then it would have to have some kind of a really energetic run to get through all this back and forth in here. We have this wick. Again, we'll address that should we start to break down a little bit more. But this looks pretty good. The only thing that changes the immediate bearish stance I hold now is if we trade back above consequent encroachment of that red low right there. Okay, and that's based on the weekly discount wick. This one here. Let me make sure you can. It's got to get above the upper half of this wick, and that's going to be defined by that red level. Okay. All right, and now we're going to take a look at what price has done today with these quadrant levels with this volume imbalance. Notice that I have the settlement toggled to blue on the daily chart. You'll get this volume imbalance when you do that. Now everything transposed that was highlighted and addressed on the weekly and daily chart, dropping down into a 15-minute time frame. You can see here at midnight, New York local time, you had buy side, it hit that. Turtle soup breaks down. We have a nice SIBI here, so it's a fair value gap. The high and the low of it on the 15-minute time frame. This is the upper quadrant of that weekly discount wick. It's the upper quadrant, the midpoint of it, or consequent encroachment, the lower quadrant, and the low of that weekly discount wick. That's what these levels are, and this is the high of it, okay? So we hit it here going into right before 9 o'clock. We broke down. We traded through the daily volume imbalance. Again, that is this. Here, the separation between this candle's close and this candle's open. That's what I'm highlighting there, okay? The bodies. We sliced through it and came right back up perfectly to consequent encroachment. Broke below the midpoint decisively. Immediate rebalance. It touches this candlestick here. Breaks lower. Bearish order block, but it's also the top of the fair value gap SIBI. It's this in here, and this is the same fair value gap SIBI low. And you can see that that just poked its head above the water right there. All these levels were starting on the 15-minute time frame, the daily and the weekly. When we drop down to the 5 and 1 minute chart, everything will start to make a lot more sense because you're going to control your impulses by watching the order flow on that 15-minute time frame. Because your 15-minute time frame, that's your bellwether time frame. That means the majority of what you're looking for intraday should be controlled and or driven by, like, it's air traffic control, basically. Think of it like that. 1 minute charts and 5 minute charts, or anything less than a 1 minute chart, there's going to be lots of movement, okay? Lots of movement around the airspace. in that intraday session or that trading day. So you want to control all of your air traffic control with that 15-minute time frame. So by having all these reference points here, what we're saying is we went below, made this fair value gap, couldn't break through. The bodies were saying, no, we can't get in there, then broke away. Okay, that means we're bearish. It's broke aggressively down hard through the daily volume imbalance, came back consequent encroachment. Was it heavy? Yes. We created a immediate rebalance here. Next candle, we dropped down. Couldn't even come back up to hit that as a bearish order block. Stayed in the lower level and just got above this candlestick's high and then rolled over again. So institutional order flow entry drill. And then we have a bearish order block here. We worked it several times and it ultimately broke lower when we get to the end of the lunch hour, which is 1:30 p.m. Eastern Standard Time. And we broke again aggressively. And we keep seeing the market only see the lower half of the premium PD arrays or fail to get to them at all. That's a very weak market. And ultimately trading down to August 13th, 2024's daily fair value gap high. And you can see that on the daily chart. All right, here on a 5-minute chart, you can see the same things occurring here, working that fair value gap SIBI low. And again, I'm highlighting and managing the annotations. That way I know what I'm referencing and how it's anchored to the price chart. This level is anchored to what time frame? 15-minute. This is a immediate rebalance on a 15-minute time frame. Notice that it doesn't look so clear, and that's why it's important that you manage your annotations correctly. Otherwise, you'll lose all of the insight that you're getting by watching these lower time frames. I have these levels on a notepad. As they form, I write them down, and I'm constantly referring back to what price is doing and where it's at in relationship to that. So that's why I don't have it on my charts. I did an execution today, working with the afternoon session, and I'll review that at the end of this presentation. But this is what your chart should look like as it's being annotated, and you're managing all the time frames, how they're anchored, what PD array they are, and noticing how they are behaving. They're working the lower half when it's premium arrays. They can't trade in the upper half. It means institutional order flow is bearish, and it's not just bearish, it's extremely bearish, not just, well, it might go a little bit lower. It's heavy, really, really heavy. All right, let's zoom in here on a 1-minute chart. You can see that we had worked that fair value gap SIBI low based on the 15-minute time frame. Rallied up in here and broke lower. Worked perfectly to the daily volume imbalance consequent encroachment there. And then we had our small little fair value gap right here. Breaks lower. Trades back up in. You can annotate as a bearish order block if you want. Drops lower. And again, look how price is being controlled by that 15-minute time frame. Every annotation, look what it's going on. The bodies are doing what? Respecting that 15-minute order flow. No volume profile, no VWAP, no depth of market, no ladders, no level 2 data required. Open, high, low, and close, or in a candlestick, will tell you everything based on time first, and then price. The market breaks lower, reaches down into the lower quadrant of that weekly candlestick's wick. And again, that's the midpoint of it. That's the upper quadrant. And the low of it is this dark line here. So that's why you want to make sure that you annotate your chart. Now you can dress those levels up and annotate them with text for your own charts. But I know what I'm looking at, and I don't need them on my charts. I use the raw data. Okay, and now let's take a closer look at that 1-minute chart at the opening bell at 9:30. So we trade up in the consequent encroachment of the daily volume imbalance. And here is first presented fair value gap. So it's the first presentation of a fair value gap. It's extremely small, but guess what? It's just, that's what it's going to be. It's like, why fight it or resist it? So the market creates a little bit of turtle soup here after hitting consequent encroachment, breaks lower. We have a fair value gap there. I'm not annotating that because I want you to see the relationship to that first presentation of the bearish fair value gap right there. Look at that. Isn't that beautiful? Bang, hits it, breaks lower, and then we have another fair value gap, but this is a reclaimed fair value gap, because when it broke lower, if price goes up into it here, normally when you see a SIBI like this and price breaks below it, if it can come back up into it, it can act as a premium array to sell short from. But if it trades through it and comes back down and breaks below it, and it offers one more opportunity to go into that same thing, that's a reclaimed bearish fair value gap. Market breaks aggressively lower. Using the immediate rebalance on the 15-minute time frame, again, look at the bodies. We get these little errant price action and breaks lower, but it's also using a bearish order block on this 1 minute time frame. Notice the 1 minute up here. Breaks aggressively, institutional order flow entry drill here, no close of the full sell side imbalance, buy side inefficiency. Breaks aggressively lower and then trades into consolidation going into the lunch macro. Now, this is what it looks like with regular trading hours. You can see that toggle down here, RTH, and we had a huge opening gap. So we had a discount opening range gap that never got traded to. It opened right there and just stayed heavy. That sometimes is, again, very indicative of the market wanting to get somewhere very quickly. It couldn't even come back to make an attempt to touch it, let alone trade back into the halfway point. All right, on your charts, for those that are watching, eavesdropping, the lows I mentioned here over a week ago, I told you to watch these lows here. And then there's an inefficiency with that order block as well. But I mentioned specifically these two lows here. And I said if we start to fall out of bed, we would see 19,100.50. And I believe I said that at the beginning of last week in the live stream. So I'll count you to go back and look at that. Anyone that's been following along and doing due diligence with their note taking, they have this information in there. But you can also still find it in the live streams. So it's the sell side here and that fair value gap. So the green box and this red level at 19,100.50, that's what it's anchored to. Okay, so it's Wednesday, the 14th of 2024. You can see that that's the information for that individual fair value gap. That's what I'm highlighting here, and that's why you can see the date down here. So that when you are screenshotting for your journaling, Caleb, you want to make sure you're putting your cursor right over top of the very specific fair value gaps or PD arrays. And when you do that, down here in your date and time axis down here, this is your price axis on the right. The bottom is your time and date axis. So whatever you're highlighting with your cursor, make sure you're touching the right one like that. And it'll show at the bottom that it is the Wednesday, August 14, 2024, 3:45 p.m. Eastern Standard Time fair value gap. So with those two reference points, when we go to the present market view of today, you can see now on a 1 minute chart working with the afternoon. Now, before I get into this, real quick, this is the part where I'm reviewing the trade idea. I counseled you all in many, many lectures that you don't want to be trading in the morning session immediately after a holiday, but you can trade the afternoon. Wednesday afternoon, 1:30 p.m., that's the end of the lunch hour. So lunch hour is technically 2 hours long. It's 11:30 in the morning, New York local time, to 1:30 in the afternoon, New York local time. So you can see we had a SIBI here, trades up into that, rejects. Another SIBI, trades up in consequent encouragement of that. And this is a fake bull flag, and we broke down. This rally up in here, I'm trading into a bearish order block on the 15-minute time frame. Then it breaks lower, and it gives me an opportunity to trade in here. One more time, when this candle opens up and stabs up into this little bit of a range, I'm trying to get short in there as well. And then it breaks again. We have a bearish order block. I'm targeting that right there. So when it rallies, I'm expecting it to really start to spool lower. Why? Because we're in the macro 1:50 p.m. to 2:10. That's when the market's going to really aggressively run for liquidity. Where's the liquidity? I saw a guy, Harry, I think his name was. He says, you didn't go short during the macro at 150. You went short at 140. You don't need to correct me. Okay, that's an observation for you, and this is where you're learning. I'm shorting, but I'm expecting price between the 150 to 210 to start spooling. It means it's going to run to where the liquidity is, which is where below that 19,100.50 I told you about last week. So when I tell you about these levels, if it gives me a setup, I'm going to trade them. If I don't have a setup, then it's not useful information. It's only when the time and price and the setup is there. Then there's something to talk about because you saw the execution video. And you'll see the execution video link in the comment section, or not the comment section, but the description of this presentation on Sun's YouTube channel. And then here's that green shaded box, which is the fair value gap on that August 13th or whatever date it was. It broke lower. And now watch between here and here. That's a fair value gap. And I want to get towards the end of the bottom of that fair value gap, the shaded in green I just showed you. And I want to get close to consequent encroachment of that 15-minute time frame SIBI. It doesn't look like a SIBI here because I'm looking at a 1 minute chart. So if I have that information shown like this, I'm putting a fib on that low to that high, and it's basically framing the midpoint or consequent encroachment of the fair value gap or SIBI that's framed here. And go back and watch the video again. You'll see that these levels are a 15-minute time frame, fair value gap. It's a SIBI. And I don't have the consequent encroachment highlighted here, but I'm doing it here to show you. My exit that I moved my limit order on while being short, selling into the 15-minute bearish order block, that little open and stabbing up, I'm getting short right into that range as it does that. And then I'm trading that bearish order block right there. And then one more time I added there just because I wanted to throw in there one more because I saw a comment saying that you don't make $20,000 a day. That's cap. So I did another execution to show 20,000 again. Twist the knife, ICT twisted. So sorry, Caleb. I'm sorry. I forgot where I was at. The limit order is basically towards the end or bottom of that green shaded fair value gap. And it's also as close as I can get to the consequent encroachment of this 15-minute SIBI. So I'm trying to finesse basically both of those levels, trying to get close to it. And I didn't get all this, and that's fine. It's okay. And it actually went a little bit lower later on in the afternoon. But there's the details. You can see all the entry prices, all the arrows and whatnot. And I showed that in the recording as well on my channel. But this is the last portion of the day. And Caleb, this is your homework. And for everyone else that's watching, this is your homework as well. You are told and taught where the last hour of trading the 4 macros are. Label your chart with those 4 macros and highlight anything and everything that is pertinent to you. It's not something that I'm going to show you, okay, but I want you to start looking for things in that last hour. The more time you study it with the references in terms of the time I've given you, look at the previous lecture I gave on live stream or recorded video on my channel. I showed the actual 4 macros in that last hour, 3 o'clock to 4 o'clock. And you'll see a lot of setups in here that were based around that premise.